Welcome and thank you for joining. Japan's power market is undergoing a major transformation. In 2024, traded volumes quadrupled on the previous year to 72.9 terawatt hours, and we're seeing this momentum continue with the largest ever monthly volume of 13.6 terawatt hours, recorded in March 2025. At the same time, participation in the Japanese power market is growing and diversifying, with nearly 100 active participants split evenly between domestic and international players. Add to this the recent launch of EEX's Japan Power Monthly Options and Order Book Trading, and it's clear that options are becoming a stronger focus for traders and power asset managers. To help you assess risk in this quickly changing market, we've created a 4-part case study series on navigating Japan power options with Lacima Trader. We'll show how Lacima Trader can help accurately value and manage the risk for these new options and other common Japanese power assets, and address the key questions you need to answer during the process. In part 1 of the series, we're going to dive into the first step in the process, building and profiling a forward curve. Using an example that reflects real-world Japanese power market behavior, we'll not only explain how to build a forward curve, but how that information helps inform your trading strategy. Please note, this case study is for illustrative purposes only and does not constitute a trading recommendation. While we have taken care in preparing this example, we cannot guarantee the accuracy of all data. Since our case study focuses on the EEX Tokyo Power Monthly option, the first step is to understand the Tokyo power market. We want to create a curve representing our best prediction of what the price of power will be over the next year, which we will call the forward curve. Once we have a forward curve, we can use it directly to get the mark-to-market value of contracts, including those that have different intraday splits. To do this, we will construct a forward curve that's consistent with quoted market contracts and at the required level of granularity, in this case, half-hourly. The Lacima Trader curve can quickly and simply create forward curves from quotes on futures and forwards contracts. All we need to do is input the quotes in this format, as well as what time the peak period starts and ends. For this series, I've set the periods per day to 48. So Lacima Trader will build a consistent forward curve with a value for each half hour. This is the forward curve for the baseload power price. The forward curve follows the quotes when it can and fills out parts based on inference. For example, in Q3, we have a quote for the entire quarter, the first month and the second month, but not the third month. Lacima Trader will infer what the third month has to be for the 3 months to average out to the quarterly forward price. Similarly, for the full forward curve, including both peak and off-peak prices, Lacima Trader will infer what the off-peak price has to be from the quoted peak periods and base period price. We can take this curve and use it, but it does not capture any of the intraday shape of the power market. We will particularly want to capture that shape for simulations. Lacima Trader can capture that shape and apply it to the forward curve we've just built with its profiling functionality. To use the profiling functionality, we need to input the historical spot prices and define how the prices should be categorized. For this example, we are categorizing the prices by peak and off-peak periods, by day of the week, and by quarter. Lacima Trader then uses this data to calculate how much each period of each weekday tends to be increased or decreased from the mean. Here I've charted the daily profiles for the first quarter. We can note that the Saturday and Sunday profiles tend to be quite similar in comparison to the rest of the week. And each day, we have a peak in the morning, a trough in the middle of the day, and another peak in the evening. Lacima Trader then applies these profiles to the forward curve. Here is a 30-day sample of a fully profiled half-hourly forward curve, which is plotted in light blue and more closely resembles how power prices tend to move, compared to the original curve, which is plotted in dark blue. The average of the fully profiled curve over each peak or off-peak period will match the original forward curve. Here is the profiled curve over a full year. You may be able to tell that the profiling does change slightly each quarter, as that is how we have categorized it. So as you can see, accurate analysis is key to managing risk and making informed trading decisions in the Japanese power market. Generating profiled curves is essential as they help us understand what the market is doing and underpin further analysis and decision making. That's it for part 1 of our series, Building a Forward Curve. If you have any questions about building a forward curve or how Lacima Trader curve can support your specific portfolio needs, please reach out to the team using the details shown on screen. Otherwise, join us next week for part 2, Simulating Prices. See you then.